Investing for beginners. 5 main differences between option trading and stock investing. Number 1 is the best advantage of trading options. That's what I love the most about trading options. By the end of this video, you will understand the differences between options and stocks. Difference number 5. There is a big difference in gains. I use individual brokerage account for option trading. For January 2023, just 1 month, I made over 20% in 1 month. S&P 500 returned 6.18%. Nasdaq is doing really well, 10.60%, but it's not as good as option trading, 20.57%. And individual 401k is my stock investing account. I buy whole stocks, dividend stocks, but I do not trade options. My return is 12.65%, just 1 month. It's still better than putting my money in Nasdaq Composite or S&P 500. So if you know how to pick stocks, if you know stock investing, your return could be better than just putting your money in S&P 500 or Nasdaq Composite. But if you don't want to study, if you just want passive income, you can put your money regularly every month in S&P 500 or Nasdaq, and you're gonna do better than most people. But if you want to study harder, if you want to beat the market, if you want to know option trading and stock investing, your return could be better. So the return is much different. So that's what I like about option trading. And you're gonna ask me, hey, that's not so much different, 20% and 10%, but that double difference can make a lot of difference in your whole world. I'm gonna show you how these small differences can change your life. Let's say you use individual account for option trading, just like me. You put in 10,000 at the beginning of the year, you made 20.57% gain. Your money will have become $12,057. 2,057 gain just within 1 month. That's a big difference. And 401k, you just put in stock investing, you just pick stocks, which stocks to buy, growth stock, dividend stock, but you do not trade, you do not use options, and you put in 10,000 at the beginning of the year, 12.65% gain. That means your money will have become 11,000. $1,265 gain. So which is good, but it's not as good as 2,000. Do you see the difference? How about you just put in Nasdaq? You don't want to do your own research. You don't want to invest in stock or pick the stocks, and you don't want to do option trading. You just put in Nasdaq Composite, 10.68%. So your money will become 11,000. So which is better than doing nothing, 1,000 gain. But if you have done option trading, your return could be more, twice double. That's a big difference, don't you say? And S&P 500, 6.18%, you will have made $600 gain just within 1 month. It's still better than doing nothing. So if you want to start investing, you can open an account. The link is going to be down below. You can get free stocks if they have promotions. So how about 1 year difference? Let's say if you are consistent, you make money consistently in option trading. So 792 difference between, so basically with 401k, you pay stocks and you don't want to do any option trading. You just pay stocks, invest in stocks, growth stock, dividend stocks. You just minus 2,057 and 1,265. The difference is 792. So over 12 months period, 1 year, the difference between option trading and just stock investing is 9,500. So 9,500, how could that change your life? You could put in more money in Roth IRA or 401k, or you could also travel around the world on 9,500. That's a big difference. How about the difference between option trading and Nasdaq? 1 year difference, you just take 2000 minus 1068. The difference is 989. Over 12 months period, you will have made more than 11,000 in option trading, or rather than just putting money in Nasdaq. How about with S&P 500? 2057 minus 618. The difference is 1,439. Over 12 months period, 1 year, your money will have become 70,000 more if you do option trading than just putting your money in S&P 500. 17,000. That's almost 1 year income for Americans. For people who live around the world, it's much more than 1 year income. That's big difference. So your lifetime will be reduced. Basically, instead of working for 40 years, 50 years and retire to travel around the world, you could retire in 20 years, or maybe 30 years, or maybe 10 years, depending on how good you are, how consistent you are. How about 10 years difference? 95,000, Nasdaq 180,000. That's a lot of difference. If you make money consistently in option trading, 118,000. How about S&P 500? 172,000. That's your college education funds for your kids. That's your retirement. 172,000 difference. You could just use this difference and put your money back in Nasdaq Composite or S&P 500. You will stay better off than just putting your money in S&P 500 at the beginning. So the profit that you make from option trading, you put it back in S&P 500, you put it back in Nasdaq, the difference could be a lot more. Just imagine, a lot more. Return on the gains. You're compounding your return. You're compounding the interest on whatever gains that you make. Just remember, this difference do not have any compounding. But if you put all these differences back into the stock market or option trading, your return could be exponential. Difference number 4. Cost and leverage. One option represents 100 shares. One option is cheaper than 100 shares of the stock. Less cost but more leverage. It means if you just buy one option, you will have almost similar leverage as buying 100 shares, but at a very fraction of the cost. That's a very difference. So your return could be exponential if you are consistent in option trading. I'm going to show you an example. Nvidia. Let's say you want to buy Nvidia stocks 100. You multiply market price with 100 shares. You will need to pay over 19,000 just to own 100 shares. But if you use option, you just need to pay over 1,800. One options, the last price means is the market price that was traded the last time, 18.10. Because one option represents 100 shares, you need to multiply 18.1 with 100. So you just need to pay 1,810. Commission is 50 cents just to own one options that has similar leverage as owning 100 shares. That's very cost effective and have more leverage. So one option represents 100 shares. That's why you can own one options but have more leverage rather than just buying 100 shares. That's gonna cost you a lot more, much more. In this situation, it's 10 times more, 1,800 with 19,000. The difference is a lot. Difference number 3. Options have expiration dates. Stocks do not. If you look at Nvidia options, it has different expiration dates. March 17, 2023, it costs 18.10, so you need to pay 1,800 to own this option. But if you want to buy stocks, it doesn't have any expiration date. You just buy one of the shares costing $192.75. You just need to buy that. You just need to pay 19,000. Because stocks do not have expiration dates, if the company is doing well, its stock gonna rise over time, even if its stock price drops temporarily right now. So you can own this stock for as long as you want. As long as the company is doing really well, you could make money. But for options, if you're wrong on an expiration date, let's say you buy call options expires on March 17, but its stock dropped, you could lose money. Options gonna expire worthless at the end of the expiration date. So for options, you have to be right on the timing. You want to buy call options, the call options stock price has to rise significantly in a short time before expiration date for you to make money. So that's a big difference between options and stocks. Difference between option trading and stock investing. Number 2, strike prices. Options have strike prices, stocks do not. What do strike prices mean? If you look at Nvidia options, call options 190 strike price, what does it mean? If you buy call options of Nvidia, strike price 190, you can buy one of the shares of Nvidia at 190 per share at any time before and until the end of expiration date. Basically, let's say you buy call options 190 strike price, Nvidia stock rise over $200, $300. You can buy Nvidia stocks at 190 per share at any time before and until the end of expiration. So that's the very big difference between option trading and stock investing. It's very important to choose the right strike price and the right expiration date to make money if you want to buy call option. For stocks, you do not see any strike price. You do not see any expiration date. You just buy and hold the stocks, and if the stock goes up, you make money. It's simpler than option trading. Difference number 1 is the reason why I love trading options. Stock investing on margin incur borrowing interest because you're borrowing money from your stockbroker to buy 100 shares. Option selling does not incur interest. You can buy options and you can sell options. I prefer selling options because brokers do not usually charge interest for selling options. You are just using your buying power. You just need to deposit money, and brokers give you more buying power than your deposit, then you can use it to sell options. That's a very big difference. If you want to borrow money to buy one of the shares of stocks, you need to pay interest. It doesn't matter if the stocks go up or if the stocks go down, you still need to pay interest. For options, if I want to use the buying power, I don't need to pay interest at all. And plus, I get a premium right away after I sell options. A good relationship with my broker and a good investing experience give me much more leverage than my deposit. I love it. So I can use my deposit, multiply the leverage to sell options. If the stocks go up, I make money. If the stock go down, I also make money without having to pay interest. That's a very big difference in return. This is how I make more consistent income. If I buy stocks on leverage, I'm losing money on interest for sure. It doesn't matter if the stocks go up I still need to pay interest. If the stocks go down, then I lose more money because I need to pay more interest for that. So that's horrible. If my stocks go down, I still need to pay interest on the stocks. I'm losing money on the stocks, and also I'm losing money on interest. That's double-edged sword. Option selling is a part of advanced option strategies. Option selling can be riskier than stock investing. That's right. If you get raw expiration date, raw stock price, if you buy options, or if you do not know how to do it, you can lose money. But option selling can be less risky than shorting stocks. Let's say you want to short stock. You believe that a stock gonna go down. You short stock. A stock goes up significantly. Your risk is unlimited. But if you just buy put options, your risk is limited to the premium that you pay. So it can be less risky than shorting stocks. Advanced option trading usually has a much higher chance than just buying normal basic options. That's why I love advanced options. I love option selling. The difference is big return. Individual brokerage, I use option trading. Return is 20.57% in 1 month, January 2023. It's much better than putting money in S&P 500. It's double the return of putting money in Nasdaq. It's also better than picking stock, investing in growth stock, dividend stock, no trading. So my option trading return is much more than the other investing strategy. Over time, that's a big difference. 10 years, 95,000, more than 100,000, more than 172,000. Option trading can make a big difference in your life. If you have any questions, comment down below. Open a stock trading account, option trading account, get the free stocks. The link's gonna be down below. Like, share, subscribe.
Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now.
If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist. Stock investing, stock trading, option trading, real estate, cryptocurrency.